Small businesses across India are in a credit sweet spot. They can now afford working capital easily as the traditional practice of lending against assets is replaced by loans based on cash flows. This can be a massive push towards formalizing the Indian economy and bring a larger social transformation. To understand India's credit revolution, we need to go back to November 2016, when the Prime Minister demonetized 1,500 rupee notes. By late 2016, India had quietly achieved 3 critical milestones. Almost all Indian families had at least one bank account, smartphones and internet penetration was high, and the United Payment Interface was launched. These independent achievements would connect themselves to bring a golden era of digital lending. In the aftermath of demonetization in November 2016, many small shopkeepers faced a cash crunch that threatened their survival. However, this would soon prove to be a silver lining as most of these small shops and kirana stores adopted the newly launched digital payment systems, pioneered by companies like Paytm, PhonePe, GPay, and MobiKwik. As India fought with cash shortages, UPI became an excellent alternative. The UPI payments network was launched in April by the National Payments Corporation of India (NPCI). It connected the entire financial sector under one umbrella network, processing billions of payments each day. Users could send money to anyone with an active mobile number and bank account. By March 2022, UPI transactions had crossed the $1 trillion mark. However, the story does not end here. Big data brought the next layer of complexity. As these transactions were recorded on the network, a lot of data was generated on how individuals earn, spend, and save their money. The network was flush with data of real-time turnover of small shops as a bulk of the payments were made through the UPI. Private companies rushed in to capture the UPI boom, with digital wallets spending millions on cashbacks to capture the lion's share of the payment data pie. After the success of the UPI, the Government of India focused on developing the Account Aggregator or AA model, which allows a secure data exchange between a provider and user. The Account Aggregator framework is the last link in opening up the vast trove of financial data, making it accessible to lenders and wealth management service providers to provide paperless services based on digital contracts. Under this framework, an account aggregator will facilitate the flow of financial information instead of money transfers. Launched by the Reserve Bank of India in September 2021, the Account Aggregator framework can automatically evaluate a person's creditworthiness or a business's health through cash flow statements. Each individual and firm now have a digital footprint and lenders can approach them with loans based on this data. It is estimated that this untapped segment of 650 million users may have credit requirements of more than $300 billion. The Indian public sector banks, or PSBs, held the most amount of data within the Indian financial system, with digital records of KYC documents, addresses, and phone numbers of millions of people. This data is digital gold for financial service providers like fintech lenders, insurance companies, mutual funds, and other wealth managers. PSU banks were initially reluctant to share this data as it would destroy the proximity advantage these banks enjoyed with customers. Once banks share this data on the open network, PSBs can be easily outcompeted by digital lenders who do not have to spend on developing physical infrastructure in remote locations. They can offer savings products with higher returns than fixed deposits, and provide loans at a lower rate than the banks. Public sector banks will be reduced to data collection hubs in this great game. However, the finance minister pushed for the inclusion of PSBs into the program. In August 2022, all public sector banks enrolled into the Account Aggregator program, resulting in 1.1 billion bank accounts being AA-enabled. This big move connects every bank account with a financial fast-track rail line, which facilitates information flow between individuals and financial service providers. How does the Account Aggregator framework work? The Account Aggregator, or AA, manages the data from sources such as banks, mutual funds, or insurance companies. Customers can open an account with any of the several AAs operational today. They can link ongoing accounts such as savings, fixed deposits, investment schemes, or insurance. Usually, a unique identifier such as your phone number is used to link various accounts. The AA can fetch your information from your account using OTP verification. The AA doesn't store users' personal data on their servers but just facilitates the data flow from the source to the seeker in real time. For example, next time you need a loan, you can simply approach a lender digitally and give your consent for a data fetch. The AA will fetch your financial data such as bank statements and credit score, and share it digitally with the lender. This entire process is digital without the need of a single paperwork. It's very likely that your next digital account opening for any financial service will be done digitally through eKYC and OTP authentication. Who are the account aggregators? AAs are essentially non-lending NBFCs licensed by the RBI. The work of an AA is to fetch real-time financial data of users and share it with service providers. This speeds up the KYC process, cuts down processing time and costs, reduces chances of fraud, gives more data points to the lender to evaluate and underwrite the borrower, and helps the borrower get credit faster. India has successfully collected the financial database of more than 90% of its population. With the advent of the UPI and AA framework, it can leap towards a brave new world, where there is a free flow of financial information among individuals and businesses. Simply put, lenders will get great borrowers, borrowers will get great lenders. A win-win situation for all. Thanks for watching. If you enjoyed the video, consider giving it a thumbs up and subscribe for more.